Well, I mean, I don't think it's a surprise for a lot of people in Saudi Arabia, because the whole point of the Vision 2030 was that oil independence in terms of expansion of the economy and GDP growth driven by productivity as opposed to oil. So an expansionary budget should fuel that. And if you look at Saudi, I mean, the budget has few foundations behind it. So first, we have a low debt to GDP ratio, still below 20%. We have capital reserves at the central bank at SAMA of $500 billion almost. We have a non-oil revenue in Saudi that had hit record high in the last 2 years of 37, 36%. And we've reduced substantially the expenses, plus a trade surplus. So why would it be a surprise for a lot of people? And the point was, an $80 oil wasn't what was driving the budget of Saudi Arabia.
But there are fears about that, because I was in Vienna, I was traveling around at OPEC, I was asking these ministers about what they were doing when it comes to the price, and there is a fear, a real fear now that OPEC has really lost its relevancy and it's lost its ability really to manipulate prices. Something they say they never do. But how worried?
Well, I think they were worried from the bull run of the oil as well. I mean, an $80 oil, all of a sudden going from a $27 oil literally 20 months before, was also a bit exuberant for the Saudis. And always the Saudis had said $60 to $70 oil is what we're looking for. We're still within that band. Will it go irrationally down? I don't think so. Global demand is not showing that. Supply is being cut, especially with the Iran sanction. Yes, exceptions aside. So Saudi is expecting and budgeting, I think, for a $60, $70 oil and running that deficit because of all these buffers that I just mentioned.
I want to ask you about what has been reported several times in the press. I think the first report was out of the Wall Street Journal talking about the Saudi government padding the market. Should that worry investors?
Well, let's take a step back. I mean, first, we don't know the facts because it's very hard to track down government investments through these managed accounts and so on. But let's establish that they did buy into the market. So who buys into the market in Saudi? So it's 3-4 entities: the PIF, the Public Investment Fund. The second one would be the PPA, the Public Pension Agency, or GOSI, the General Organization for Social Insurance. And these three entities own 40% of the Saudi market. So about $200 billion is owned by these three entities. So people forget that. So any tiny movement of these makes a huge difference for the Saudi market. That's one. Number two, let's look at the financial merit of that. So PIF's first primary purpose is to invest in global and local public equities. As mentioned, 40% is owned by the three entities. So there was a dip in the market. They saw that as an opportunity. They bought in. Very small liquidity. So that small liquidity mixed with their massive, in comparison, this massive inflow of capital from them makes a huge difference on the market. At a time when investors were very fearful, they became a bit greedy. Let's not forget, November 16, it was said that they bought about 40 billion riyals into the Saudi market. 40 billion riyal, they've made 40% on their money in the last 2 years. So it's a good investment. They also act as a stability factor. We have a lot of irrational exuberance in the market, a lot of irrational behavior because of this retail investor nature of the Saudi market and the geopolitical events. So as a long-term investor, they actually do provide a stability for an investor when you have a very retail-centric market in Saudi Arabia.
Let's quickly talk sector-specific. What's going to feel the benefit, really, do you think, of the Saudi budget? And frankly, what do you think in terms of the Saudi investors themselves? Are they buying back into the market?
Well, we haven't seen, if you look at the current liquidity levels in Saudi Arabia, we haven't seen Saudi investors coming back to the market. We're still at like $600 to $800 million of inflow of traded volume every day, which is still very low. So we haven't seen the Saudi coming, but let's not forget the catalyst around the corner. So March 15, we have the first FTSE wave of the inclusion, and then May after we have MSCI. So we have 6 months next year of inflows coming from passive funds and maybe ahead of that of active funds. So if you look from a flow game perspective, we do believe that the Saudi investors will preempt that and come a bit ahead. When? We only have 3 months to go. So I think from now till then, we should see some spikes in liquidity and Saudi investors resuming back into the market.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.